Welcome back to Market Mastery, your 1 hour in the market that gives you all the information you need to make money and live easier. We have a very, very, very good segment coming for you. We are going to obviously talk S&P, talk about where the market is, give you your options trades for the week, both bull and bear. And then we are going to talk a little bit about what we can expect for PLTR as the inclusion news has hit the market, and talk about whether or not we're going to see more upside on one of the biggest gainers, one of the best names that we've seen in quite a while, and give you a rundown on a few of the others we always cover, with finishing with the game smash or pass, where you give us the tickers, we give you the insight, and you make your decision. So let's talk about it here. Let me get this up on the screen. We had actually not a bad day in the S&P. We've talked a lot about seasonality weakness. And I know we were just talking about it. Like, what are you reading out here? So we've got one of our longer term trend supports here. We just recaptured today, actually, which is pretty interesting. Going across our bottoms dating back to May, which is a good sign. We hit our 539 level to the T. So if you took our bearish trades that we were discussing at 560, you saw a multi 100% move. Some contracts even moving in the thousands of percent from our Monday stream. So free money. I hope you collected. We are still trading below our next range component at 550. However, when we zoom in here, we can see that we did just start to recapture some of our more important support level above 545. So what are you seeing here in this weakness? I mean, you gave it to everybody on a silver platter talking about it back in August. What are you seeing here on the readout today, being kind of range bound 540, 550?
Yeah, so again, like I probably frame ran it a couple days before it actually happened, but on this stream, I communicated like there's going to be seasonality weakness that occurs from September and October. A lot of people can't really explain why that is. Just every year something occurs, whether it's news-driven, new FUD that's being generated, or a pure technical pullback. I think this specific seasonality weakness we're seeing is a clear technical pullback. And the market going up 18% in Qs, I think it was 16% in SPY leading up to this September pullback. Like, I think it's fair, like absolutely fair, that if we do continue this technical pullback towards the levels that Austin and I talked about last week. And I want to get ahead of it. So I bought some $500 strike puts expiring December 20th. And it was absolutely wild, the volatility in those options before September occurred. Then last week, boom, up 70% at one point. And keep this in mind, this isn't just like a 0GT 1 week expiration. We still have 3 months left on these option hedges. Again, this is purely a hedge. I didn't want to, like, I'm not bearish in the market. I don't think a recession's occurring right away and like we have to get this bull rally is completely over. We're going to correct ourselves. No, I think it's going to be purely a technical pullback. And that's what we got last week, where SPY went down 4%, Qs went down 6%. And I wish I was on the spaces on Friday, but like, as you guys can hear, like, I got COVID last week. I'm slowly recovering. I anticipated like, to my subs in Discord, I wrote it out like Monday might be a dead cow bounce, and that's what we got today. So the real action will be tomorrow. And on Wednesday, when CPI gets released, like, is this bounce going to be one of those V-shaped recoveries that we experienced numerous times for all of 2024? Or is there some real fear in the recession that we're seeing in the data? And will the Fed cut rates by 50 basis points rather than 25 basis points? How many Fed cuts are we going to get by the end of the year? Like, all that's going to kind of come to play alongside the election noise, which is a couple months away. Nobody knows who's going to win. And nobody is underwriting this other potential black swan event that might impact one of my favorite stocks in the market. Nobody is talking about this yet, but it's going to become a reality. Combine that with the seasonality weakness, there might be we might retest that August low that we saw a couple weeks ago. And this black swan event that nobody's talking about is a government shutdown. This might occur in 3 weeks. This is not being covered in the headlines, really. It's kind of it feels like it's a reoccurring theme that government's going to shuts down, and not really happens, and the deal gets placed last second, blah, blah, blah. However, the FUD generator, the fear generated from the government shutdown is absolutely real in the market, and the market usually factors that in, and there's going to be some kind of pullback. So that occurring with seasonality weakness and We've experienced a lot of lower highs and lower lows on these balances, especially in the semiconductor names, which have been the safe haven in 2024. That's not anymore. There could be more volatility in the market. So I do. There is one stock that I absolutely love that could be a near-term impact from this government shutdown, which we'll talk about later on. But sticking on SPY, I think right now it's a clear technical pullback. We haven't even broached the 21 EMA on the weekly chart. That's at 538. Like we're still at 546. And we breached 550. Didn't love that. We went to 540 and like we're recovering. But like again, we haven't breached any clear technical trend yet since 2024 began. And that's the 21 EMA. Like one time we breached it, that occurred during the August tantrum, market tantrum from the yen carry trade. V-shaped recovery right above. So like I don't count that as a breach because it recovered so quickly that it wasn't a clear technical breakdown. So again, watch out for 538. If we break that down with volume and we stay below there, this is when things will get really interesting really quickly. So I'm going to pass back to Os, but that's kind of what I'm noticing past week. And I think bull market's great. And I think if you're a long-term investor, it's all about time horizon. If you're investing for 5+ years, the next 6 to 8 weeks, this is when you shine. This is when you're absolutely have your plan in place, you implement it at your high conviction names, and so you're going to benefit from the long run, short-term pain, long-term gain. This is when you actually can really do that work and implement it. And this is your dream scenario, to be honest, if you're a long-term investor. Short-term trader, maybe sit on the sidelines until the noise clears up. Yeah, so curious, what do you think about that, Os?
I couldn't agree more. I think short-term pain, long-term gain, that pretty much says it all. Like I think this is the prime time opportunity. Like this is where in my opinion, this is where you weed out weakness in the market in terms of the investors, right? Like this is where the weak hands do not pay the bills. And again, under no circumstances is every trade a long-term hold forever trade, but when you take advantage of market weakness for a quick rebound, like we did on the day that everything was bleeding off and you were adding left and right, I mean, dude, it was instant free money after the end carry trade thing. That's the thing here. If we can capitalize now, I think we have a 10-year runway to just boom, as long as millennials can carry the weight. Now, if millennials can carry the market, then we're in a great position to succeed. However, it just depends where I think the millennial generation takes it, and that'll determine kind of how long that runway is. But nevertheless, I do think we're in for like significant economic impact in the event of new president being, I guess accepted in some way, shape, or form. We always see a little bit of a boom. So looking at the SPY, as far as like what have you done for? And yes, Rick, some of you boomers too. I agree. It's not all bad. I would agree with Mr. Rick here. I'm not making any assumptions. My dad was just here. The man's a boomer, smart man, knows what he's doing. It's not necessarily a matter of age. I think that it's a good generalization to make. But if millennials can take over some positions of power and really start to assert some more healthier, long-term, pragmatic solutions into our overall economy and economic outlook, I think we're going to be in a good position. So as far as what does that mean for me right now? So let's break down these SPY options trades right here, right now. So today we printed out to about 547 and change. Our first thing we're going to look for is for a continuation of this rebound because we did gap up right here. So we are going to be at first looking for the bullish opportunity in the options market. Again, these are trades I really, really encourage you to write down and map these levels out because these trades play for weeks on weeks on weeks. It's the levels I'm identifying and the specific contract that you need to follow if you're trading those levels. So I think our first move here is to test our resistance above 550. I would not touch the trade from 547 to 550. There's not enough meat on the bone for me there to make it make sense. For those of you that are like, short time frame scalpers, feel free, be my guest. But our first real test of a rebound here is going to be 550. Once we get confirmation and we break above 550, which again, we're using the 15 or 30 minute to be accurate here. When we get a candle that breaks up, closes, and the second candle then opens above that support, that resistance that has turned over to support, then I think we will initiate the options trade, which will be a bullish trade aiming for 559. I'm going to target the 555 strike, though. I will target the 555 strike 3 weeks out for expiration. I'm going to take a quick look at the options chain here. Wow. So those of you in the Discord, we were talking about holding those SPY 542 calls over the weekend. I did not. I ended up closing it in after hours as we were on our live stream. We opened those at $2. They're trading at $4.65 today. So if anybody held those, congratulations. I did not, unfortunately, but kind of pays to know. So anyway, looking at this options chain, we're going to go 3-ish weeks out. We might go a little bit lighter just because we got a little more sensitivity in the market here. So if we're targeting the 555 strike, that puts us at $3.83. That will be a September 27th expiration. We are going to look at a confirmation of the breakout over 550. Once we get it, that's when I will enter that position. I will hold that if we continue bullish all the way up to 559. Now, the reason we put 3 weeks on it is because it might take a couple days to move up. Our first test of resistance will be 555 and then eventually 559. Here's the beauty of this trade. We have a long-term resistance up ahead here in this blue line, right? Realistically, if we get a hard and fast recovery like we did here, we should test that resistance shortly, which means that this specific options trade will be in the money at 555 and will continue accelerating that delta all the way up to this resistance, which means this should be, if the trade plays out, there should be a minimum 50% return on this trade. Minimum. So that being said, that's our bullish scenario. I think that's the most straightforward. Again, we wait confirmation over 550. I'm not taking the trade until 550. Once we get that confirmation, we are ready to ride, and that will be a winner. Obviously, I would cut that trade if we lose our support at 550.94, and we will go back to the bearish option number 2, which we will discuss now. So again, we're mid-range, so let's talk bearish price action. I think the same initial logic applies that we test 550 if we get rejected there. Now, here's the difference. Confirmation of breakout means candles above. Rejection means candle breaks above but pushes back down below. If that 30-minute candle pushes up, let's go to the 30-minute here, just keep you on the same time frame. If we see a move very similar to what we saw right here, as you can see, strong price action, we test, and then we break through and we fail, and then it immediately sold off to 540. I would be buying this. I would be opening this trade on this confirmation candle right here, 30-minute candle. Another way to look at this is this would also be a confirmation candle. We were trading above 550, and then boom, this 30-minute candle shot down and closed below our support, which means the trend changed. So that way we need to be on top of it. For those of you that don't have it, it's just stocksbuddy.com. This indicator will do all of that pivot work for you on any time frame you want. Back test at will is just stocksbuddy.com. If you're not keen on the technical analysis, it can do it for you. If you do want to do it yourself, again, confirmation candle, that's where I'd open this trade, and we're going to trade it from 550 down to 539. Easy trade, easy money, 50% plus return on a $10 move on the SPY. This one will put you in the bank. So I didn't identify the contract. So in this case, I'm going to do the same thing. I'm going to go target the 545 puts for September 27th, which are currently priced at, now these are about 756, so about $700. If we push up to 550, these will be significantly cheaper. I'm not targeting the strike that is the target. I'm targeting in the middle because I want to get maximum delta appreciation there. So these are a little more expensive. I wouldn't suggest going that far out to target 540 because in the event that this turns around, you're not going to get that same risk management or return. So again, bullish situation to the upside, we're going 555 calls. Bearish situation to the downside, 545 puts. Both trades will pay if you follow the confirmation and the walkthrough I just gave you. These trades have worked for a minimum of 50% return at least once a week for the last 52 weeks. Most of these have run over 100% in each week for the last 52 weeks. So again, what I'm telling you here, this is tried and true static. These ranges matter. The SPY follows them to the T. All you have to do is watch for confirmation, and it's free money. So I would really suggest either copying this chart, or I'll make sure, Porter, I'll get you set up with you're set up with TradingView so we can export this chart. So if you follow Penny Boys on TradingView, I'm going to publish this chart so you already have them on there if you use TradingView. You do not need a paid TradingView subscription to view that, by the way. So I'm going to publish that for you so you guys have it. Make sure you go follow it on TradingView so you get the update. But yeah, that's pretty much the SPY analysis for the week. How do you feel about that in the short term, guy?
I mean, I like it. I like playing both sides, especially this week, because I think we're at the part of the phase where these reports are becoming more and more meaningless, like the CPI reports. I don't think any number that we're going to see is going to really dictate what the Fed's going to do next week. I think we're for sure cutting rates. I don't think there's going to be any kind of black swan number that we receive that will change that or increase it to significantly to make it 50 basis points no brainer. Like, I think it's just going to be a nothing burger, and that's what it's going to be the result of the data for. But maybe a lot of people will front run the move, and tomorrow if we're really green, I think I would fade that move. If tomorrow if we're really red, I might go green on that move. Like, I think it's just going to be like where we're at today, which is around 547. Like, I don't think we're going to go above 550 this week, really, or below 540. Like, I think it's just going to be a really weird. There's so much unpredictability because that last week's move, that was on no news. Q is going down 6%. There was nothing fundamental, and it was nothing new, no catalyst that drove that down. It was just the fear that we're in a really seasonality week period of September. And that's like kind of scared to me because it didn't take much for the Qs to go down 6% in 1 week. They gave up 1/3 of their 2024 gains in 4 trading days on nothing. So I think like playing both sides is the way to go. And there's going to be some wonky September type moves that's unexplainable. And that's why playing both sides might be the move on getting that alpha of like one of these moves. If they go 200%, the other move goes down 90%, guess what? You essentially are up 100% still. So like, that's kind of like my mentality about what do you call it out and what I would do with it. Hold on, my landlord's calling me a BRB real quick.
So while he's handling that, we're going to take a look at Palantir with the S&P inclusion news. This is a big deal. I really think that right now, more than ever, let me get this pulled up on the chart here. This name should be at the forefront. You see it hitting not all-time highs, but relative highs on unbelievable volume. This name has been, tried and true to us. We first got in this stock at about $8 on our cost basis. I'm still holding all of it. This has been a huge win for us, and I think it will continue to provide more upside as this company is, in my opinion, pretty well positioned for the future. I don't see a world in which they do not get the love that they do so greatly deserve. So let's take a look at this chart here. So again, we've already mapped out this range, right, between 26 and 37. 35 to 37 was our long-term target, which has been almost hit. I don't know if we went to 35 or not, just short of 35. But nevertheless, the upside here is pretty significant. I think we have potential to see $45 plus in the next year on this stock. I think that, the volume you see right here today on the S&P inclusion news is unbelievable. We're going to go over to the monthly chart to get a better long-term outlook here. This strategy, again, is similar to what we talked about with the SPY. It proved time and time again to be the most valuable, beneficial, and accurate strategy for trading these long-term growth picks. And you can see that we have very healthy movement and strength up to our next retracement level, which is $37 and change. We are following our trend support beautifully as we are guiding up to the promised land. I do think that there will be some de-escalation on this move, but nevertheless, I will be targeting by the beginning of kind of Q2 of next year. I think that we very well could see this name trading at 45 plus. Remember, we did trade that after the IPO, but I think we're going to head back there with our kind of inevitable target over the next 3 to 5 years being $70. So I do still think for me and the risk I'm willing to take that this stock does pose, significant upside, being 100% plus. This chart just is primed and ready. And I think that we've seen the upside. Again, the big move was getting in here before the breakout, which we did. So if you're not in the community, there's going to be a link at the bottom. I do suggest you get in there so that you don't miss any of these trade ideas, trade alerts, or analyses, because this is the kind of stuff that I think really gets you to this is how you stay ahead of the pack.
So it's talking some Palantir. Okay, so Palantir. If you guys are Palantir bulls, Friday was a glorious day for us. Not just because they got included in the S&P 500, which is huge, because there's going to be funds out there that are going to be required to now buy Palantir. That's why it catches that bid. But it's more of a narrative validation because, again, like since its inception, Palantir was always labeled as this black box consulting company for the government. Create this like voodoo magic for all what their offerings promise for enterprises. So a lot of people didn't like there's a lot of shitcodes out there, companies out there who claim they're AI or like they promise all these solutions to their issues. And if it felt like very voodoo-y or like magic wise, like they wrote that off because clearly there's a lot of companies in 2020, 2021 who promised these things that they filed for bankruptcy this year. It's SPACs, like a lot of SPACs promise crazy, wild assumptions and they file bankruptcy. So they always were worried that Palantir, which I was not part of the camp, was kind of like promising all the world, but really not going to be able to deliver it because of past scars that they experienced in SPAC. So them being included in the S&P 500 is just huge because now they're being validated as one of the 5 most important companies in the world. And that's going to be a really big sentiment change on what Palantir is, because not just a black box consulting company, now they're a real AI software player that's in the S&P 500, which is an elite group to be part of. And you're seeing them catch a bid today, up 14%. And I think that's because it's paired up with BP, which is a massive energy conglomerate that's worth $88 billion. They renewed on their a contract with Palantir for 5 years. Again, reiterating, where once you infuse Palantir's operating systems or ontology into your enterprise, that you're not leaving, and you're actually not just not leaving, you're proving to save hundreds of millions of dollars. You're going to continue to re-up. This re-up on 5-year deal, that's not going to cost Palantir any S&M costs or G&A costs. Like, it's pure just revenue that's going to go into their fundamentals. That's going to be an 80% gross margins, maybe even higher because it's just a renewable contract. And the crazy thing about Palantir is that they're making all this money. Let me pull up exactly how much they're making this year. They're making a ton of money. I don't know what on top of my head, the percent cut is on the $3 billion they're supposed to make this year. But the commercial side of the business is just beginning. And the revenue that they make per customer is I did the math before, might be COVID brain, but it's around $10 million a customer. Right now, they doubled their commercial client customer count from 125 to around 250-ish. Don't know, or I think it's like 295. Don't know the exact number, but either way, you see the growth going up 100% year over year, and it's just beginning. And you're seeing these contracts getting renewed, and there's so many enterprises out there that I just said that right now they're at less than 300 commercial clients. There's thousands. There's tens of thousands of enterprises that will be adopting, in my opinion, Palantir's operating system. So you see, like, people are like, oh, is it too late to get into Palantir? Absolutely not. I just said they have less than 300 commercial clients. There's so much runway right now for Palantir's business model that the scalability of it is bonkers of how much it can actually go up. So is it too late? Absolutely not. Valuation maybe needs to catch up, but I don't know, because I don't know another software name out there that actually can validate a premier multiple valuation against their competitors and a growth thematic like AI that has no ceiling. Like, Palantir is the only tier 1 AI software name, in my opinion, out there. And you're seeing their valuation, their multiple expand because it's getting associated with that premier tag. And nobody really knows the ceiling of that premier tag. But if you can continue to see like their largest commercial clients renewing their 5-year contract, the validation by the S&P is huge. And they have like a twofold tailwind of AI on the commercial stage. also, unfortunately, as geopolitical tensions rise, which I think it's going to, especially if if Trump becomes the president, there's going to be a lot more geopolitical tension because of obviously what a Trump-led president entails. Like Palantir would be a major beneficiary off that. So like they have the government side of the business and the commercial side both hitting a tailwind at the same time, and they're still worth only less than $70 billion. And it's just like wild times ahead. I wish it added more when it dipped to $21. I only added 10%, but I will be adding in any kind of macro-driven sell-off. And this is what I wanted to highlight of a potential pullback I could see in this name if the government shutdown happens. Because if the government shutdown happens, even if it's for weeks, days or weeks, they can't spend any dollars on any existing contracts for whatever they agreed on. So Palantir, a huge component of their business is the government. So if they shut down spend for days or weeks, that's going to affect them in the near term, not long term, just near term. And that could be a potential opportunity on any pullback from that. Is I call that a black swan. A government shutdown's a black swan. If there's any kind of black swan driven pullback in this name, I will be adding because I know it's short lived. And I even at 12% exposure in my portfolio, like I don't have enough yet. I wanted this 15 to 16%. And luckily it's like kind of growing into that weight in my portfolio by itself. Like I want to continue to add more. And although I'm raising cash and I have hedges in my place in my growth portfolio, this is one of those names I'm going to utilize that cash, use my soldiers to buy up because I know they're going to be one of the winners of this AI race that's only in the early innings in a 5 to 7 year horizon. So again, love to see it. It's breaking $34. I think the next test is 35. All-time highs at $39. I think if it hits $39, I think it's going to be a blow off top in an NVIDIA type of fashion. And again, Austin and I make this comparison all the time. NVIDIA's narrative, when it changed from a gaming chip company to the king of the digital economy, you're kind of seeing that with Palantir, black box consulting company, turning into the AI software name. You're seeing the multiple expand and how aggressive the stock price is being reflected off that. Like, it's a very similar type of narrative change. And you saw what happened in NVIDIA. If Palantir can get to that 30% revenue growth for the next couple of years from that commercial client growth, just expanding as aggressive as it's been, it's not so like far-fetched. Like, and if that occurs, it's going to run.
Yeah. I mean, already is. Much as I hate stocks, buddy, because it's better than me sometimes, I got to give it a little credit. I didn't realize that it also gave the buy signal on the monthly for this one at $7.86. But I was looking at what stocks, buddy, calculated the stop loss to be. That's what this blue line is. It changes the stop loss based on what your time frame is. So you could do it on the daily, on the hourly, whatever. And for the sake of what we're talking about, you're talking about long-term growth. We want to know, like, where is a real long-term pivot? I would say this trend line is where I'd start. So like you mentioned a good point. Hey, a macro occurs, I'm buying pullback. Let's talk about where that is, where that could be. Because I think that's the best way to get everyone prepared for should that happen. We need to know exactly where we're going to make these ads. And I'm thinking, I mean, best case scenario, dude, we follow this trend support, right? Like we've stayed tried and true to it. It's religion right now. But it can break, and I actually like this $21 level. So let me start at the top. Best case scenario, we stay above our golden mean reversion, which would put us at about $30. Best case scenario. Second scenario would be trend support, right? Which right now would put us between 26, 27. Worst case scenario, but still a bullish trend, I think, is going to be staying north of $21. Would you agree with those? Like, where are you looking at?
It's never going to go in the teens again in the history of a stock. So you have to be hyper conscious of that. Like, I think the first level I'm buying, like I really want to buy, like maybe no never get there, is that $28 level, which has been consistent, like even on the weekly chart. And you're seeing on the monthly chart, like if it pulls back, that's kind of roughly 20. Once it hits that blue line, that's $28 if it pulls back there. So like, again, $28 is a huge level. I know a lot of other traders, big traders, like a ton of like success and following, like they told me like they're looking at 28.50. Like I'm getting a lot of confidence that $28 is a great level, $28 to $29. If it gets there,
Yeah.
I don't know, because of the past like couple weeks, like it's defended, it's been above $30 consistently for 5 straight weeks. I think that's just showing me the new trend is up. So you have to create another level for Palantir. And right now, if I pull up their weekly chart,
So
again, I would love it. Their 9 EMA is at $30.40. Like if I'd want to get there, sure.
Yeah, what's even more interesting, so we're basically we're at 1/3 of the month, right? We're at the 10th, we're about 1/3 through the month. And our total volume currently for the month is 334 million shares traded, right? If we go back to August, which was a big buying month, that was like a strong month on volume, 1.2 billion. We're basically approaching a billion. I think we need to see a billion plus on the volume to see continuation right now. I also think that there are a lot of people out there that are going to probably try and sell the news on this. So I do think it's worth being said, like the macros being as unstable as they are and just being how hot this name has been, even though this is continuing good news, right? This is kind of like, I would say, like on par with the value of like a good NVIDIA earnings, but not a great one, right? But back in the day, so a year ago, when a good earnings still yielded growth, right? Now NVIDIA needs to hit earnings out of the park for that to happen. And we'll talk about this later because some of these government infrastructure bills going around right now to build these data centers tell me that like NVIDIA is pretty much locked in a couple $100 billion in revenue over the next 10 years with some of these infrastructure deals. It's like, it's a no fucking brainer. So for those that were feeling a little lack of confidence, getting in a little late, like fear not. But to focus on this name now, I would love to see a real show of strength over these next 2 weeks. I'd love to be north of 37, even test maybe 40. And then I'd like to find trend because our next real major point of confluence where trend meets time is right here at about $34, which would put us out next year if we just continue a slow snail's pace. But I think that's extremely optimistic that if you follow like snail's pace trading, we should still be trading around 34 in June of next year. Phenomenal. That would be consolidation. But I don't think that's going to happen. I'm just saying that's what we're looking at as kind of our worst case scenario.
No, I mean, there's very few stocks out there that you could be so much fun in the market. You don't feel confident what direction is going to go. You kind of put your money towards names that have proven that they're winning right now in a highly secular growth thematic, and also have a defense component where if things get actually awful geopolitically or government wise, they're going to benefit. Palantir is one of those companies. So like, I also want to factor in like, what if a recession occurs next year? Absolute reality. Like, I think that's don't be hard-headed if you think that no recession might occur in the next 18 months. Like that actually could be the case. What's going to happen to Palantir when all these companies in these industries that are like kind of archaic, that haven't really innovated, are having this net income squeeze on their margins that they have to figure out what to do to expand them, but they can't because consumers are tight. There's not a lot of trading volume or whatever industry is. Like, what are they going to do? They're going to look for products that can immediately bump up their fundamental margins. That's Palantir. So like in the financial industry, for example, the banks, Morgan Stanley just today announced that they have a 10% decline in trading volume quarter after quarter. Q3 was not a good quarter for them. So if that continues, that means like, all right, well, our margins aren't expanding by itself. Like we need to figure out ways to increase our margins. Palantir's product is their operating system will do that for them. And that's going to be an immediate bump. And you can solve the CapEx spend that's required to have their operating system infused in their enterprise. But in the long run, like you can at least guide up on your earnings expansion based on the money you're going to save from Palantir. So like, I think I can't think of a bearish argument for Palantir long term because we're seeing the commercial side scaling up. We're seeing the government spend going to pick up. If there's a recession, they will benefit because enterprises around the world will need to look for solutions to increase their margins. And it's just like win-win-win scenario. Now it's all about valuation, but I think valuation will catch up to them with the adoption of the platform. And at a certain point, like once a spaceship gets trajectory out of the gravity, like they start coasting. Like I think Palantir might be very close to that stage of just coasting, and everyone will just start coming to them.
Yeah. So let me ask you this: where, based on your model, right? Where should we be trading right now?
All right, so that's tricky because. All right, so
would you say that this is fair?
It's overvalued right now, but you're pricing a lot of business coming in, which at the trajectory, like right now, Snowflake.
But I'm saying just business as usual. They just execute on the few things we're already aware of.
Oh,
where do we end up from a fundamental standpoint?
If they continue the trajectory the past 2 quarters, my model has them as a $46 stock by 2026.
And let's see what we came up with. 45 with our major point of confluence being here at 45 to 47 is exactly what we were just talking about while you weren't here. Would you look at that? And I think for names like this that have the social presence and the technicals and fundamentals both check out, those are the winners. Like the last one we had like this was Robinhood, right? It all lined up. So I think that's why this name, I don't know, I feel the highest degree of confidence because those $15 calls we got in are up 1,606% now. Still holding. I've sold. Oh yeah, I only sold one. I sold one at $1,500, and I'm just hanging on because nothing has prompted me to sell. So that gives me an even greater degree of confidence. So I love it. Anything else you want to say on this name before we move over to another one that we're getting some questions about that I think is worth chatting about?
Don't chase this name at $35, but we're going to get pullbacks. It's inevitable. This name has to be on top of your DCA list. That's what I'm saying. Like it's up over 100% in 2024. I think right now, like the days of it in the teens is never going to happen again. It will never break $20, in my opinion, ever again. So once you swallow that in your head of like, all right, those days are over. How can I slowly build up my position? Have your levels like $30, $28, pounding the table at $21 if it ever gets there ever. I don't think it will. Like you have to slowly add to this name, but there's just so many catalysts that you're seeing it every week. News comes out like BP renewing for 5 years. That's one of their bigger commercial clients. Like that was just a Monday morning news for them. Like that's just like the type of business they are. So there's a lot of names out there which we could talk about. I know I've seen a lot of comments on Jumia. Should we talk about Jumia?
Yeah, that's what I was just gonna say. So great minds think alike. There it is.
So again, time horizon. I'm investing for 5+ years from now. If that's your time horizon, I think anything under $5 is an absolute no-brainer on Jumia. Absolute no-brainer. I think they're corporate. So CEOs are awful traders. They're known to be awful traders. What do I mean by that? They don't price in the best time to dilute their shares for secondary offerings to raise capital. Like they could care less. All they care about is like, I need $100 million. I'm just going to do it right now. And Jumia had a really interesting bid coming up to the earnings cycle. And then they have a huge currency exchange issue, which we've talked about multiple times. But like all I care about was a couple metrics: SG&A costs, cash burn, revenue growth on a constant currency basis. That story continues. Even though it's down 80% from what it was a month or two ago, that story is continuing, and I'm still bullish, and I double my position under $5. Like I'm going to be adding because I have the 5+ year horizon. However, I totally understand how a lot of traders or investors got burnt again from Jumia because they did a secondary offering paired up with their earnings call, and that secondary offering wasn't a small one. It was 20%. And they did that it got announced that they diluted their shares 20% in 3 trading days right after their earnings. So that is
Idiots, dude.
that was
It's this is common practice in the small cap world. They just don't use their brain.
they don't use exactly. So people have scars from 2020, 2021, and those scars opened up again, and they're not going to get into it until there's a clear catalyst on like why it should go back up. Again, nothing is different about their business. Half glass full view of what just happened. Their solvency risk is at a 0. They're near close to being break even. They just raised $125 million. And now they have a treasure chest of over $200 million that they can reinvest in on the logistic networks or whatever they want to do. With their solvency risk is behind them as 0. But again, a lot of people are short-sighted with small caps. They can't do the long-term gain. And I think if you can stomach like a couple months until they report the next earnings or next new whatever catalyst will be on the stock to drive it back up, like I think under 5 is a steal. But again, the way this is trading, like in a seasonality weakness period where you want to go defensive, you don't go towards small caps. You go towards large cap, big tech, or financial institutions. Like there's all like that's not, you don't go towards Jumia. And I think that secondary offering the earnings season right before the yen carry trade drama, right before seasonality weakness, was a perfect storm for the stock price to just completely break down. And that's what you saw. But again, I like to add when I see blood in the water, I'm a long-term investor. Nothing changed about the Jumia thesis except for an amateur CEO mistimed an offering. And that's literally all it was.
I just can't believe that they just don't. I mean, they got to understand. I'm assuming that they have they have a team of analysts that are kind of doing the calculations. But one thing I don't, which I guess a perspective they would benefit from having, is the retail sentiment. I think if they really understood how these things trickle down and impact the market, which is like way beneath them from the ivory tower, right? It could inform them to make better decisions.
Well, you also like if they're an American company, I think they will handle it differently. They're a German-based company, and their IR team is a third-party IR team. They're not like out of their organization. So, like again, like small. I worked in like big companies and small companies in corporate strategy, and like the smaller companies, like you'd be surprised of how thin the teams are, and you'd be surprised of how minimal the chain of command is on communication. Like, again, like. It's an unfortunate situation, but for me, it was a 1% position, 1.5% position before that earnings and went down straight to below 1%. I doubled and it's at a 2% position. But like that's how I'm managing my risk for his company where I think it's going to be a 5 to 10x bagger. And again, everything that we said about the company 2 months ago is still there, except better in my opinion because the solvency risk is at 0. It's just a narrative issue, and that's going to take some time. As you saw with Snowflake, as you've seen with Unity, like narrative changes on stocks is completely different than business execution. And right now, this narrative change is the issue. It will recover, but it's going to take some time.
Yeah. I think that if we can see this little range that we've identified here, let me pull this back up. There's really 2 that I'm mainly focused on, right? Is basically the move we saw from October 23 following trend all the way to what is now our pivot, right? $5.46. That's stocks, but he's calculated that as a pivot. I think that the trend support rolling off the bottoms of these bigger days, right, where we didn't break outside the norm, I think that is a clearer picture of our upside. And then if that's true, right, if that analysis is makes sense, then we're actually not in that bad of a spot. Like never do you want to see their market cap get shredded to a third of what it was but a month ago. But here we are. Again, this is a name with long-term capitalization potential. Most of you took the alert on this trade, right? You took this trade alert at $3, $3.50. You wrote it to 15. You 5x your money. I'm assuming most of you cashed in some, which is good. Great. Now you got more money to load the boat as we sit against our long-term trend support here. And we could even extend this out and then factor time into the equation to see where we're going to end up, because I think that this chart is so wild that there's quite a bit that needs to be, analyzed a bit deeper, because again, we traded up to like what, $70, right? Now we got to find what the bottom is.
While you're showing that, like, this also is a perfect question. I just looked at this stat to confirm it, but like position sizing is huge for portfolio management. Palantir today, it went up my position went up $4,000 today. What's my Jumia position in my growth portfolio? 4,300. It almost went up a Jumia's worth position in one day. So again, a highly speculative position like Jumia, although it's like a 1.8% position in my portfolio, if it 10x's, I'm going to get a decent chunk of those gains from my portfolio. But if it doesn't, it doesn't matter, because I have my high conviction names being worth like 10x what my Jumia position is. Like, that's kind of how you have to handle a Jumia position. Like, being able to stomach these kind of volatilities, that's fine. Like, I still might have my thesis, but don't put Jumia as a 10 plus position in your portfolio, because it's highly volatile and it's still a thesis that could not play out. But I'm banking on it playing out. Just position size yourself so you can, like, if it doesn't, and so like I'm wrong in 2 years, like, it doesn't destroy your portfolio.
No, and it never should. Never under any circumstance, as it shouldn't. I think I have like 500 shares of this. That's it. Just load up a little bit. But again, to just kind of cover really quick, we have a ridiculous liquidity zone here. So really for Jumia, the case here is like over 21. That's when this really gets interesting, even more so than the run up. What we're telling you right now is like, hey, there's a bottom dollar scrape opportunity. Scrape the bottom of the barrel, take the whole ride up with a fat margin of error, right? To then in anticipation of the liquidity zone getting tapped into over 21, which you can see this stock moves wildly when it hits that liquidity zone. So the buyers and sellers aren't stacked up waiting. It's just going to be boom. It's not a short squeeze, but I think that's an example that most people would relate to. Like when you get into that specific zone and rhythm, it's just demand to the upside. So this basically is that zone, right? We've seen it from $5.39 to $23. So that's number one. We've seen it from 23 to what? This thing went to $70. So those are the levels to pay attention to. An opportunity now to buy the bottom, hold the bottom with stop in place, right? Minimal risk on this, but it is a riskier position, so it's small size, right? Two ways to manage the risk. You manage the size of the position, you manage your cost basis in the position. Really, that's it. So we want to do both, because the upside here is good. And we should have an easy move. Again, I outlined it for you, 14 to 21. Maybe we could publish this chart too so everybody can see it. But this is a pretty straightforward one. I mean, look, this thing loves to be volatile. It also loves to bottom out here at like $3-4. So all we can do is work with what we've got. So yeah, that's that. Do you have any other final thoughts on this one?
No, I don't. Should we go to the next two names I want to talk about, or
Yes.
should we do DigitalOcean or Celsius?
DigitalOcean first, because that was one I wanted to look at, but I didn't have time earlier. Because
it's breaking out now. So again, this move today. Let me see the volume before. It's a huge move today on the stock. Let's see.
Yeah.
Oh, volume was 2x too.
Yep.
So this is a real move. So we called this out for you guys. I think it was below $30. My cost basis is like $28 this name. This is one of the many monsters out in the market in cloud computing thematic, which again is infused in the AI thematic, because as you guys know, phases of adoption. The first one is AI related, hardware related investments that covers compute, hardware, and chips. DigitalOcean has the compute component, but they also, on their last earnings, they're like, this is a game changer that nobody's really talking about, is the GPU droplets, where GPUs for NVIDIA cost a shit ton of money to get. A lot of these SMBs don't have the luxury of using their CapEx for them, that they can rent these NVIDIA GPUs as they use them. Again, as a consumption model in the sorts of like rent as you need them. And that's a game changer for SMBs. So ever since like that earnings report, DigitalOcean's been trending up because like it's really impressive what they're doing. That if their revenue goes towards 20% with the margins they have right now, that puts them as an elite Rule 40 score. And they're only a small cap and a highly growth thematic like cloud computing. Holy moly. So I think today's action is really interesting because there's been no news that's been released to reflect it. However, they are presenting at the Goldman Sachs conference this week. So my thing is like they release updated numbers on that
Look
GPU
at this
dropper
front
product.
run, dude. You got a front run here. You got a front run here. Like somebody's been just sitting there, just throwing bags of money into the pot.
No, it's some again. Like I wish we had more information, but like I'm just reading between the lines. Like I think some updated data got released today on the conference this week. That's just like causing a bullish action on this because this is like 2x volume, 8% move when small caps didn't do that great today. Like IWM was up 0.3%. So, Rocket Lab and Jumia did well, but like a decent amount of small caps didn't do well. Like this is a huge outlier. So like I don't really know what's happening, but something clearly is bullish that got released. But I think the days for DigitalOcean is just beginning because
it's those. So we got into that. I think it's a $50 calls on this one. They soared today. Still, I'm net negative. Still 11% down, but these moved up 52% today. So,
jeez.
Yeah, it makes me want to shoot myself because usually on trades like this where I have decent time behind them, I will add those really bad down days. Like I should have. How did I not add 50 cents on September 4th? Because they traded at a mean of $1. Like it's just stupid.
Jeez.
That was dumb on my part, is what it is. But this trade in particular, I think, finally coming back. Again, to go back to the chart, we mapped this one out. This was one of the more, in my opinion, well-executed trades that we had where we really planned in advance. We planned right. We were looking at everything as it was. We understood the risk. And we did see some down days, and we drew down to like $27 on that macro event. But nevertheless, I mean, that was a hell of an opportunity. Did anyone here from the Discord, did any of you get ads on this when we dipped down to the 27s? Because I'll be jealous if you did. 2025, January 2025 for the expiration. So that being said, we were estimating a potential move to $45. I think is what we popped on there after we mapped out the last 4 or 5 moves. It should put us at least at 50.
Again, like let me look at my model. Like I won't say my model price tag because that's gonna be released later on, but DigitalOcean right now, like even after this move, it's trading at 17 times this year's EBITDA. That's dumb, in my opinion. Like that's just using the Rule 40 score. It should be, which again, like minimum, it should match the Rule 40 score. Right now, the Rule 40 score is a 32. So it's 2xing over here. Like I think it's fair valuation after 2x's, and that's a $70 price tag. So like no, even higher now, 75 to $80. Like I think there's a ton of runway in this stock. And I wouldn't be surprised if, I really hope it doesn't happen, but like I think M&A season is going to ramp up really quickly as soon as the Fed starts cutting rates and that rate cut cycle begins. I think M&A is going to go crazy in software, like tech and genomic names and biotech. Like it's going to be a feeding frenzy on all these bigger companies that have a ton of cash that instead of going towards AI related investments or growth investments, they go on the aggressive for acquisition. DigitalOcean is a premier candidate for an M&A. Premier. And I don't think it's going to, I really hope it doesn't happen, but like I could see again, like that's another tailwind that gives it a high floor on the stock because it can't go too low because it will get acquired if it goes in the 20s again. But I hope not because again, this is a real winner and they acquired some real AI talent in the past 2 months. Like the VP of AWS from Amazon's cloud computing, you don't leave that job to become a C-suite at DigitalOcean unless you actually see a vision that DigitalOcean will have a clear place in the cloud computing stack in the post-AI world. Like you don't do that at all. And this guy has a huge resume behind him. Like before AWS, VP of NVIDIA, like this guy knows his stuff. And if he bounces to go to digital ocean, just like they're not going to be sold. They clearly have a niche or a moat in what they do, and it's only going to continue. And market doesn't really like give that much visibility to companies under $5 billion. And this is like one of those victims, and we're going to benefit off of it.
Yep. I couldn't agree more, man. I think that I like what you said about the M&A season, because that's kind of the sense that I'm getting too, is like I just go back and back and back to, what happens with rate cuts. Like we already know. We already know how that plays out every time. So past this seasonal weakness, how do we not have runway to the upside? It's just a matter of, you don't want to be the catch the fallen knife guy. You want to be pragmatic. But like Shay said with the DCA stuff, you should have a list of names and an amount of money set aside that every time those names get beat down in a way that they shouldn't be, because you're talking, these are your 5 to 10 year big boom names. That's when I'm inserting a little bit more capital. So let's say, for example, I keep 1,000 on the side and I want to put 250 in each time. Every time that gets a drawdown, 4%, 5%, boom, I'm throwing it in. Now it's up 5%. I'm up 5%. Okay, now it's down 9%. Boom, I'm throwing it in. If it's one of those names with the long-term conviction, I think that's a key point of distinction. Like it's got to be a name that makes sense to continually expand a position in.
Well, when the market because here's how you guys need to view it. When the market pulls back, essentially it's giving you a discount on your favorite prices, stocks. That's what it is. It's essentially giving you a Black Friday sale. When the market pulls back like aggressively, like 5 to 10, when it corrects itself, 5 to 10%, it's giving you a fire sale. So in this fire sale, do you want to buy the high quality products that rarely give you that discount, or do you want to catch a falling knife that gives you even more of it? Instead of being down negative 40% off the product, it gives you like, an additional 20% off that product. Like you don't want that because it's usually always discounted, and there's a reason it's discounted. Rather, you want to go buy the Gucci, Louis Vuitton that's like all of a sudden gives you that 25% discount that's absolutely rare. You buy up that product because it doesn't usually have a sale at all. And if it does, it's absolutely rare and short-lived. Rather than, I don't know, buying a Vans product or buying some tier 3 product that's usually has seasonal discounts. They're always there. Like you don't buy that. Like it's not crap companies, but like they usually have some kind of discount associated with them. But like these like elite companies, they rarely do. And when they give you that discount, you buy with 2 hands. You also gave me a really good idea for my next newsletter. So again, as you guys know, I've been spent close to 10 years in corporate strategy. M&A is one of the things is part of my lane. And a key characteristic on M&A from the bigger companies to acquiring the smaller fish is great tech, poor corporate governance, mishandling of that tech in a corporate governance way, messaging or whatever it is. If they have great tech, they will get acquired. So maybe I will release like top 5 candidates for Q4 this year that will get acquired if M&A season heats up. And I'm going to talk about those 5 companies that have incredible tech, but was poorly mismanaged that could be up for acquisition. So that's a good idea. I'm probably going to be writing that in my next newsletter that's going to be released next week. But thank you for the idea.
Yeah, good. I think that is the ticket, man. And I couldn't agree more with that. I mean, when you get good bones, look at it that way. Real estate investors want to find good bones, right? They know they're going to change out the counters and they're going to do that. But at the end of the day, the infrastructure of the house has to be great. Maybe it wasn't taken care of very well. It's basically what he's talking about is the stewardship. They didn't do a good job taking care of their baby. And there is a formula and a template for this that does work. And those that have the skill, experience, and people can do it. And so when you get names like this that are a good candidate, I couldn't agree more. That like you just want to find great product, great tech, great base, whatever it is, and then find the weakness in the market as far as how they've managed to do. Because I think also there's like a good corporate governance has held dog shit companies up for quite a while. When the product does suck, it can't scale. There is no more market share to take. You see them get a bump just because they know how to talk to the world. And I think that there's something to be said for that. But yeah,
No.
So let's keep it moving then. There's another name you wanted to talk about. Now's the time.
Yeah, Celsius. I also just saw TNT commented ARM is up 7% today. That was my newsletter spotlight I did last week. It is up. I'm really annoyed they didn't give me the opportunity to buy, but it's because of the Apple event. If you guys don't know, Apple just announced a new iPhone 16. It's being powered by ARM chips. So Celsius. Let's talk Celsius. As you guys are aware, like I had an overweight position in Celsius in teens years ago. I sold 50% and it was at $85, $90. Again, all public information validated by a third party. Like I'm not BSing. Like I sold at 85, 90%, 50% of it. Probably should have sold all of it, but I have some nostalgia associated with this name, which again, I need to work through because I got emotional by holding on to Celsius when I clearly knew it was way overvalued at 85 and 90. I sold 50%, but I should have sold 100%. Regardless, is Celsius a buy under $35? Or what is happening to Celsius? So if you guys don't know, like Celsius is going through a drastic narrative issue where last week the CEO, John, which nicest guy in the world, I've talked to him a couple times. He isn't the best salesman sometimes, and he communicated that their sales are down $120 million. But really what he meant is their sales with Pepsi is down $120 million. Not really. And the way Celsius works, they sell they fulfill bulk orders to Pepsi, and then Pepsi then distributes it to like all these stores. That's how their business model works. Like Celsius doesn't just sell it to like the CVS's, the Vons, or Ralph's. Like they sell it to Pepsi, and Pepsi's D2D distribution that sells it to these stores. So we just found out recently that like I think Pepsi has been loading on these like cans and the volume for the past year, overloading it to the certain point where the demand is like not still there, but it's not as aggressive like it's been the past year. And they just ordered way too much the past year. So now they're kind of like being light on their orders to Celsius because they have a shelving issue, inventory issue that they need to offload these cans quicker than later. And then they return towards the mean of like having a nice amount of inventory necessary for the return to make sense or demand, the volume to make sense. So a lot of the Pepsi orders went through in the past year and they like, oh shit, we did way too much. Like we have to offset that. So they ordered less from Celsius this past quarter, but it's not a demand issue. It's purely an inventory issue. Nothing on the consumer side is really indicating that Celsius days are over. It's just a Pepsi related inventory issue, which takes a couple quarters to correct itself. And this could be if one point tin hat theory on as a corporate strategy, like Celsius acquired 10% stake in, Pepsi acquired a 10% stake in Celsius 2 years ago. I think they want to acquire more. I think inevitability is Celsius will get acquired by Pepsi. And maybe Celsius going from like 20 something dollars when Pepsi did that 10% investment to $100. Maybe Celsius got a little ego driven, elbows up, type of like, oh, look at us. We're at this sitting at the table now with the Monsters and Red Bulls. But really, Pepsi maybe was like, we're doing this for you guys. What if we pull back our orders because we have an inventory issue? Like, what then? You see what happens. Celsius went from $100 to $30 just because of a Pepsi-related issue. So essentially, Pepsi is controlling Celsius completely on what trajectory they're going to go on stock price. And that's kind of alarming as an investor. But I want to reiterate, like, this isn't a consumer demand issue. They also mentioned that demand has increased 10% year over year. It's just Pepsi is ordering $120 million less this quarter. So again, Pepsi inventory issue, not consumer brand issue. But I think it's highlighting that Celsius's ceiling is somewhat limited because they're at the realms of what Pepsi wants. And there's nothing Celsius could do about that because the distribution network that Pepsi has is elite. And if they axe that partnership, like what's Celsius going to do? It takes years to like even get to a tenth of what Pepsi's distribution is. Like they have to like kneel to the king of Pepsi and like do whatever they want. And that's the issue with the stock. But I do want to say, like, Monster Energy drink is the perfect benchmark on the valuation for Celsius. So Celsius fundamentals has drastically changed. It's not growing 60+%. It's growing 11% this year and mid 20% next year. Huge change. Again, it's not their fault. It's Pepsi's inventory issue. But what's a fair valuation for Celsius? Right now, Monster's growing 6% top line growth while trading at 27 times PE. So if you want to use the apples to apples metric of like whatever Monster's trading at, what's the fair valuation for Celsius? It's $42. So it's trading at $32. The fair valuation right now that's being reflected on the inventory issues they have with Pepsi, their fair valuation is at $42. And that's exactly why I got to $50 strikes. Like, I think this sell-off is way overdrawn. It's not a consumer demand issue. This has happened multiple times across the board with a ton of different products in the past, and they've recovered. It's just a short-lived couple quarter issue. And if you want to slap a fair multiple of 11% growth with their fundamental profile equal Monster, that's a $42 price tag.
I think that's really interesting. So basically, they gave him the old "sit down, boy." Like, don't forget I made you.
100%. And like again, maybe this could be a negotiation tactic to acquire more shares. Like Celsius has one owner that owns 25% of their outstanding shares. So like this guy's been around like since the beginning. He won't be selling, but if Celsius is like, I don't want you guys owning more than 10%, we don't want to be sold. And now Pepsi's like, all right, we'll see what life is without our assistance. And they unfortunately saw that life. So maybe it's a negotiation tactic. So if you see in the headlines that Pepsi acquires additional stake in Celsius, my tin hat theory is correct. And that's when you load on Celsius. Like things are going to be business as usual. And it's going to go up like significantly. Like I wouldn't be surprised if it was like a 40 to 50% move in the coming months after that headline announcement. So like, I think if it needed to hold that 200 week on the 200 SMA on the weekly chart. If it goes above $37, holds that, I think it's okay to enter a trade a bit. And once that headline comes through, you just go all in on whatever that trade is going to occur because it's going to fly.
Yeah, no, I definitely think it could. And I just find that I just think that's so funny that they just got a little big for their britches, but dollars for dollars valuation wise, the value's there. So I want to do a quick plug because like if you guys don't have that, you need to go follow him right now. And the link's in the bio, right? Links in your bio to get that email sent every week. Do not miss that. It's absolute gold. So go see his account on X to get that link. It's just at Stock Savvy Shy. You already got that down. Get that because you get access to those picks, the short reports, and a couple other things that I think are gonna just like you can't not have them in this day and age, man. Unless you guys are gonna sit around and 24/7 be on top of the market, let those 6 other people that are doing the research all the time do it for you. So yeah, Tammy, there we go. She went in on Monster after the smasher pass up $3 a share. It has taken a little rebound. You do have a little bit of headwind that 21 day at 52, so be careful with that. But that being said, let's get into it. Smash or pass, drop your tickers.
While you guys drop your tickers, should we talk Apple? Big Apple event.
Yeah, but get them in the chat. Get them in the chat.
So what happened in Apple? It was down 2%, then just finished green. I think a couple things occurred that the Wall Street didn't like. A, they're pushing back their monetization, all these AI products till at least next year. That's not, I think a lot of like the run up to this event, like they were maybe hoping a near term monetization. That was not the case at all. On top of that, every update every AI related product offering was going to be a free update. No subscription costs. Again, near term monetization, not there. And there wasn't really a consumer conscious product that was released. I was hoping it's like, all right, cheaper product for like the people like not as affluent as like a lot of people listening are, like they can afford it. Like a cheaper product, that was not the case at all either. So I think it was those 3: near-term monetization, not consumer conscious product being released, was the headwind of like sell the news events. And I'm surprised it wasn't more red. Again, I think all the consumer products, like was wow. Like the camera, adjust the camera, taking a photo of a dog and it shows you what breed that dog is, taking a photo of a bike, and immediately Siri shows you where you can buy that similar product. I think creating your own emoji is so smart by just saying like create a frog that looks like a suit. Emoji created. Like I think a lot, and also like the email feature of like it summarizes the email automatically for you. And so that like when it pops in a lock screen, it shows 2 sentences of the summaries of that email. I think that's a game changer. I think convenience was the winner for consumers. The losers was the near-term monetization for shareholders. And usually there is a disconnect from consumer benefits and shareholder benefits, and that's what we saw today. So I think it's a great win. Long term, it's gonna be a great win. I think if you don't have if you have an iPhone 13, 14, 15, I think you will get the new phone based on all these new features that they showed today, and that's going to be that upcycle that the stock price was pricing in. However, the PE multiple won't get any kind of bump in the next like 6 to 12 months, and that's like the lag of like, oh god, like it's the upcycle is going to happen. That might be the benefit, but that the service monetization, that might take longer to actually play in.
Yeah, no, I think it's been on a hell of a run. Anytime I see that curl on the downside, it means that we're not going anywhere to the upside for a period of time. I don't like it. You want to see mountaintop. That's what I want to see. Not this rounded hill nonsense. It did take to our level perfectly, so you got an easy 10% swing if you bought off of the analysis we've been giving you on this stream, which was a firm buy at 197 on Apple. You would have got that, and you'd be right up again. So congratulations if you took it. So let's get into it real quick because we don't have a lot of time. We'll start with KR, Mr. Cools, Kroger, who is taking the world by storm on the acquisition cycle. That whole Kroger Albertsons thing, that's still up in the air, right?
I think so. I mean, that's just such an awful business model. Like I would never want to be in that kind of business model. But if you want to look at the chart, I mean,
chart's not good. Chart looks like we're coming back down for a soft landing at 45. So from a long basis, KR is getting a pass for right now.
Yeah.
I would wait for that $45 soft landing. On and on.
I would stay away from Chipotle. Like stay away from consumer products, to be honest. Like you're seeing across the board. Like it's just not pretty. And Chipotle is an expensive stock, to be honest, for the run up they've had. Like I'm passing.
Plus they got old boy splitting time now, right?
Yeah.
That's no
they don't really have a seat. Like it's just a mess. Like I would stay away.
A firm on a tear.
It's just a vehicle to capture rate cut is coming narrative. Long term, it's not a real business. Stay away. Nope. It's just a commodity. It won't survive long term.
So short term upside, long term no thanks. Yeah. It did recapture trend support. So for those of you trading, this is kind of your trend line to really pay attention to because it is abided by it quite often. And I think it will continue to.
I will also say, like, our firms, their fundamentals don't pass my SIF test. I think they're lying a bit. Like, there's no way their charge-off rate is better than American Express. There's just no world that occurs.
So UPS staying true to the trend, it has continued to see it beating. What do you think about UPS? I don't think we ever talked about this name.
I mean, I think Amazon's eating their lunch and will continue. Like, UPS is just gonna be one of those dinosaur companies who will just be there but not do much. Like, I don't know what they could do more. It's just like you're seeing that right now. Like, it's just going to be like a what AT&T has been like. It's just like I don't know the fundamental profile, but it's just like where is it going to go in 5 to 10 years? Like nowhere. It's just going to be stuck.
Nowhere up. It's just they basically become much like you said with Celsius. Like they just become a piece of Amazon.
Yeah.
Like I think their fleet eventually, it's like whether they get acquired or not, I don't know. But I do feel like their kind of options are limited. Because it's just a matter of time before, like, when does Amazon decide, you know what, we have the distribution and the infrastructure, let's start shipping stuff for you.
Yeah.
And then they take over the consumer side and it's over. We're already right down the street at your neighbor's house, so we can easily, swiftly pick this up. And we have the tech to track and manage. So the logistics are not the concern. Interesting. I have no idea what this company is. Flutter Entertainment.
It's a FanDuel parent company.
Oh, betting revenues are hitting all-time highs, which is terrible for everyone, but for them, it's interesting.
Long term, again, I think their product's a commodity. I think once the bigger players come in, Netflix, Amazon, Apple, I think their market shares deteriorate. They're gonna have to spend more money on S&M to maintain their market share, and that's going to be at the cost of their margins. So I think the bump that he's seeing, like, happens every year ahead of football season. DraftKings and Flood, like, they catch a bid, but again, like, you're going to see a lot of numbers come out the first couple of weeks of the NFL season, like betting's this much, this one's increasing. They're probably going to catch a bid off that. So I'd probably say smash, but I just long term, I just don't see like how they would really maintain their moats.
No, but nothing but up so far.
Yeah.
So short-term opportunity. Do we have any more? Some Blake. Oh, C3AI.
Fake company.
One of Shai's favorite long-term, forever holds.
I fucking hate this. This guy is a schemer. You guys know, like, I talk about all the time, like, fluff language from C-Suite. This guy is made of fluff inside and out. Like, whatever the company's C3.ai, I would not be surprised if in 5 or 6 years it's C3.space. Like, he just adds like whatever the new growth thematic is on top of C3 and thinks, oh, we're the leaders. Like, he's a snake salesman. Like, he's just not a good CEO.
Yeah, I would tend to agree that I don't see. I mean, you got the ticker, so congratulations.
Yeah,
and that was the win. I think that's the greatest asset they have. But past that, I'll agree. And we got one more, and then we're gonna wrap it up. ZTO. What is it? ZTO Express Cayman Inc. What is this?
Never even heard of it before. Let me see.
Same. I love when there's companies I've literally never looked at, never heard of, that are worth hundreds of millions of dollars.
It's just, oh my god. Is it a storage company? Let's see.
I will say there is some demand swell here. Just looking at this chart, that is quite interesting.
It's a Chinese express delivery company. Stay away from China names, especially ones that aren't Alibaba. You can't trust any of their fundamentals at all.
I'd agree with that, but I think this one's going to get some boom to the upside. I can just feel it. Look at that demand swell. Like it's just ready to go, and then it give you that nice soft touch right there, just that little boop, just to let support know, hey, I see you. And usually you get a nice little springboard up. This could be
a good vehicle to capture as much alpha as possible on GDP growth in China. Like, this is like express delivery. Like, clearly that will go up if the region's growing, demand for consumers is increasing. Like, if you're bullish on Alibaba, treat this as like a 5x leverage Alibaba ETF. Like,
pretty much. Like, this would be you consider it as close to the lottery as you can come.
Yeah.
This is interesting. This is interesting. I might take a peek at this a little further. If I do, I will update in the Discord for everybody who's following in there. And last one, BMY. Bristol Myers Squibb. That chart's trying. Where do you stand on some of these bigger boys?
I mean, there should be a flight to safety, kinda, but I have to look at their fundamentals really quick right here. I mean, this just looks like a dividend play, to be honest. Like, they just They did raise their 4-year guidance recently. That's a win, but they have like negative. They have 4% growth this year, but after that, it's a negative 3% CAGR. Like I'm like, what's happening? Like
Yeah.
it's like, okay,
I feel like
that's
there are a
weird.
lot of these dinosaurs just sitting around, waiting around that
Yeah,
it's like,
they're
what do
too
you
big to
do?
get acquired, but not sexy enough to catch a bid on anything. Like there's there.
Yeah. It just makes you think if you look at like a post-apocalyptic economy, you get all the abandoned buildings and infrastructure, and it's like, I feel like they're too big to fail. It's like they're too big to dismantle.
Well, you're gonna see these dinosaur companies and like completely different industries just merge because there's synergized costs on SG&A, and that's their like near-term growth avenues. Like you're gonna see like what we just Kroger, Bristol Myers, like that's one. Like all
So,
right, that's
have you seen that South Park where it's like AMC, Cinemark, Applebee's, Denny? Like it was like all of them.
I
Super.
haven't, but that's exactly what's going to be. Like they're just going to merge together because the synergized costs will save them 10% on SG&A, and that's like will be the win for the stock and go up 10%.
Yeah. All right. Well, yeah, that's really interesting. We will cover one more. So this one is very interesting to me because, and I know this isn't your wheelhouse, but it is small cap growth biotech. This is one of our corporate partners that I think has done a phenomenal job with positioning everything they're doing, working on a number of basically cancer related modalities, but also technologies. I love anything biotech that I can get my hands on that involves technology, because I think there's actually an avenue for growth there. This one's definitely one to take a look at. Someone could drop. We do have a link that has all the due diligence that we put together on it. They just IPO'd. So they IPO'd around $4 or $5. No, just below $4 or $5. They IPO'd at 371. So I was as low as $2, and then this thing just absolutely ripped. Remember, with IPOs, it is always a dicey day in the market, trading to 681, where they started to find a consolidated base at 315 plus. Volume has been a little thin. However, they are scooped up right at that 200-day, and they've just held tried and true there. No real big block sales. This is definitely one I would put on the watch list because I think as we watch, and we can flip to IWM, we didn't see much today, but I think as you watch some of these health and tech related small cap growth names, if we do catch a bid on the interest rate cut, like they're going to be one of the first to benefit. So I think that's worth thinking. 2 more minutes. All right, absolute last one, just because it's GameStop, and I know everybody's probably all bonered up about that. I saw the recent Roaring Kitties back and all this other nonsense. Like, I'll just tell you, plain and simple, there's something off with that guy. I don't know what it is, but it's just I don't want any part of it. Interesting. So if you've been following this one, I mean, this one's playing right into the range. It was a buy at 23, sell 27. You see, it's done that 100 times. I'm not going to lie, though. This has held up a lot better than I would have thought over the last couple of months.
I'm shocked. I don't know what's happening. It's like, again, not going to be a real company. I think their only way, again, like
It's going to be a Bitcoin reserve is what they're going
no,
to
that's what I'm
doing.
saying. I said on the investor period, I was like, these dying companies, their Hail Mary will be Bitcoin reserves, and like whatever Bitcoin does or crypto does, they're going to benefit off it and then do secondary offerings, blah, blah, blah. Financial engineering. Maybe that's what the hope is, of like potentially that, and this guy like giving it a premium because you never know what kind of moves it would have, but it's weird.
So Charlie says it isn't him. He's locked in his basement. Maybe, man. AI is crazy nowadays. I mean, I'm not gonna lie. That first video, he seemed like it did give a little bit of that hostage vibe.
Totally.
It was odd. It was really off. Really off. I couldn't tell if he was like inebriated or if, just gunned his head. Who the hell knows, man? But yeah, if you're trading this one, I would just be very mindful of that range, 23 to 27. That's an easy range to trade. Above that, you can see 36. Anything below $20 is cut and run. This is going back to 13, in my opinion. So trade this one carefully if you do trade it. I think this is definitely a fun one to trade and worth a watch if you're skilled in the active day trading and short swing trading market, then this is for you. I think you can find an easy win on this above 23 3/4, traded to 27, get in, get out. If it runs, it goes to 35, 36, and eventually 47 if it stays to the upside. Now, I don't think that's going to happen, but those are the levels. Should it run, that's what you could see. And I think that there is definitely good upside here on a bullish trade here. Let's see what Stocks Buddy has to say. Stocks Buddy did go bull at 21 on the daily. Let's see where Stocks Buddy's at in the weekly, and then we'll wrap up. Also, a bull on the weekly at 21.22. Firm stop 1979. So there you go. You heard it first. So you guys, thank you all for showing up. If you do get a chance here on YouTube, hit that like, share us out. We appreciate you introducing us to people you care about so they can get the best information in the market. As always, thanks for coming. We'll see you guys in the Discord for the premium session on Friday. Love y'all. Stay blessed now.